Our top story this half an hour, brokerage firm Charles Schwab recently slashed its commission rates to zero, making it easier and cheaper than ever for customers to invest and trade. This led to a rate cut among competitors like TD Ameritrade, E-Trade. Analysts are wondering whether the business model Schwab pioneered can sustain itself. And joining us right now to talk more about that and his new book, the founder of the Charles Schwab Corporation and the author of Invested, Charles Schwab, is with us this morning. Chuck, it's great to see you.
It's always a pleasure. We've known each other for 25 years. I love coming on your show.
Oh, I really appreciate that. Thank you so much for saying that. And you know what? You have been such an incredible leader in this industry for 25 years that I know you, with integrity, and that's why the firm is trusted. Tell me how things have changed over this 25-year period.
Well, first of all, I love investing. I love people who love to invest, and I've always wanted to make it better and easier and cheaper for people to invest and get more people into our democracy in terms of free market capitalism. And so we've done it, and so I started out rates 35, 40 years ago. We cut the rates then when they did the decommission, the deregulation thing in '74, and we've been cutting now for. Now we're at zero, which is just wonderful.
Yeah, I want to ask you about that because, you know, this was like the bow across the, I mean, this was a really huge decision in financial services, and so many of your competitors followed suit immediately. How significant is it for you in terms of margins, in terms of earnings? What do you give up by going to zero in commissions? Well,
what we give is about 4% of our revenue. We've been providing free trades for many of our advised services anyway, along the way. And so we're sort of accustomed to doing that, and now we want to make it completely universal, that everybody can come into Schwab and get a free trade. And they'll do other business with us. That's how the other 95% of our business comes from different kinds of accounts. It could be income accounts. It could be intelligent portfolios. You know, we try to be the modern wealth management firm and have a breadth of things, breadth of services. We have a bank that helps out too, and so we'll do just fine. Yeah. I suspect we might get more business because of the free offer.
And Barron's wrote that this weekend, saying that Schwab derives more than half of its revenue from net interest income. And of course, for every quarter point cut by the Federal Reserve, you will lose $75 million to $150 million in revenue for every quarter point cut by the Fed. How impactful has that been in terms of the Federal Reserve lowering interest rates?
Interest rates go up and down, just like all the rest of the markets. So now interest rates are down. As the economy moves along, it'll probably go back up again. We're not particularly worried about that. There'll always be an interest rate. I know some people feared that interest rates would go to zero. That will not happen. I mean, you're not going to be able to borrow free money. That's not going to ever happen.
You don't
think
we're going where Europe is going, where they have negative interest rates.
Maybe governments can borrow for free money, but not for very long.
So let me take you back to what you were just saying in terms of the 25 years that we know each other. We just got the PPI number. It was down 0.3%, and the estimate was up 0.1%. We're seeing no inflation out there. How would you characterize the backdrop for investing today, and how has that changed?
I mean, you couldn't have a better economy. I mean, the unemployment rate being so low, it is incredible. I mean,
50-year low, yeah.
We are in a robust economy, and so there are many people, when things are going well, a lot of people like to talk about, well, it's not going to be that well forever. But you have to be an optimist when you're an investor. And yes, the market will dip at some point in time. We all know that. But you have to hang in there and continue to enjoy the growth that will come. Growth takes place not over a day or a month. It takes place over a year, 2 years, 3 years. You have to be patient. If you're an investor, the only way you can really make good money after taxes is to be patient.
You know, I think over time, people have trusted Schwab not just for, you know, the nuts and bolts in terms of doing things cheaper than other people, but also for things like advice. And you have created this wealth management company over the years. I think when you first started and I was first in the business, it was really arming investors with the right information to make those decisions. Today, investors are smarter than they ever have been, right?
Well, there's so much information flowing around. And one of the purposes behind me writing the book, The History of Schwab, was to let our customers know what we stand for, what are our values, and make sure our employees understand that too. So it'll be sort of permanently cast in stone that we'll never change our values for our customers. And so that's a good part of the sort of the biography there is about what we stand for.
How hard was it to start Schwab back then, and could you do it today the same way? Because we have a lot of small business and entrepreneurs on this program. We are invested in our audience, and I know that there are small business managers looking at you and saying, wow, look what he's created. He's an icon.
Well, it was very difficult early on because we didn't get the support of Wall Street. We were creating a competitor, of course.
That's right. And they were charging these high fees, and you're coming in.
And they loved that fat fee, and here was this guy from the West Coast was reducing the fees, so we didn't get a lot of support from Wall Street. So I had to go to friends and family and that to do the early financing. Yeah,
and so how did you start? What was the initial money that you needed?
Well, I had 4 people.
Yeah.
And I think we had something around $100,000.
Unbelievable.
It's incredible. Now our we're $20-30 billion in terms of not market cap. We're much more than that, but in terms of money in the company.
It's a great story, and I'm really glad you put it on paper to show us the evolution of Schwab and your role in what has happened in financial services.
Well,
so you speak about market value. Your stock traded down on your announcement last week. Right. It was down about 15% over a couple of days on the idea that you're not going to have you have free trading and no commissions.
But
do you think the market misread that?
No, I think it was a natural thing to do because our revenues will be down slightly for a period of time until more business comes in. That's what we're really about. We're about a growth company, and we will continue growing. We grow every year at a nice pace, 5 to 10% per annum, and I hope that will continue going forward. And out of that, we've always been able to find some way to make additional money. And we will grow. So
where does the growth come from at Schwab, in your view? And this also speaks to what's happening and how investors are making different choices in financial services.
Everyone needs to save, of course, for the retirement. And what's happening now, there's 10,000 people retiring every day, and they need help in the retirement planning and retirement income. And so we have solutions for them, and we will continue to be that. We think that's going to be a big growth area for us, the retirement area.
Even though the Lindsay Group reported that income inequality has actually tightened and people have money to invest, there's also a thought that a lot of people don't even have enough savings.
It's pretty grim.
What's the best advice for people in terms of...
Get started early.
Yeah, get started early.
Get started early. Yeah. Tell your children, get started early. Open an account at Schwab. You get a free trade. And start when you're in your 20s and 30s. Do your 401k, do your IRA accounts. You get essentially free money in your 401k. Start right away. Don't hesitate. Just make it happen.
You talk about starting your firm in the book, Invested, and the revolutionary idea of consumer freedom when it comes to investment. And you write this: so how would my firm differ from the kinds of firms that had ruled Wall Street for so many years? For one thing, I meant to serve an entirely new client base. So that new client base were those people who felt that they can make investment ideas and investment decisions on their own.
Well, that was who we tried to attract, people who could make decisions on their own and who wanted to have the inspiration to build up their nest egg over a period of time. And so that's the group we've been after. And of course, we also now broaden our view to help people who need more help. So we don't exclude those at all. So as the company has grown over the last 35 years, we've taken on more and more complicated situations to try to help people with their wealth management approach.
What can you tell us from your experience in terms of the bank at the company, in terms of investing, about the investor and the individual today, in terms of the broad economic backdrop? I know you said that unemployment's at a 50-year low, but do you see any cracks on the horizon in terms of a recession at hand?
I don't see any, but it's always possible. It's almost impossible to predict what's going to happen tomorrow. We just don't know. And so if you study the history of stock markets or economies, there's always the undulations, always the ups and the downs, and you have to be able to emotionally live with those things. And the most difficult time period is when it goes down. And you almost sort of begin to think, if you have experience, I'd like to have the market go down. I can get a cheaper price when the market goes down, but you have to have the emotional strength to live through that more difficult time period. Because every newspaper will be negative, every network will be negative. You just have to overcome that emotional instinct to sell at the wrong time.
Chuck, let me ask you about a couple of issues going on today. The deregulation has been a really important part of the economic growth story out there. What do you want to see in terms of the regulatory environment for financial services right now?
Well, I think it's important that we have a very strong regulatory scheme. And I think that gives confidence in all of us that we'll use it. It's amazing, you see the internet, how much traffic goes on in terms of financial transactions. And I wouldn't make any big changes. I think we are at a state that we're very confident that we have trust in our systems, trust in our institutions. We have a good capital base behind our banks, and that was improvement. There, on the margin, there could be some improvements to make us a little bit more efficient, because what we are all about is trying to be very efficient as a company, keep our costs low so we can provide our clients low prices. And that's, I think, a good win-win thing for certainly everybody.
You have been a GOP donor. What's your take on this most recent upset around President Trump? The Democrats want to impeach him.
Well, they have wanted to impeach him from the day he was elected, so that's nothing new at all. So they'll continue, when this subject matter gets over, they'll come up with a new one. So until the election, that's when they really have a chance to throw him out of office if they're successful.
That's what America is. Go vote.
Yeah, go vote. That's
rather than shaming everybody on Twitter and on social media.
Every 4 years, they want to do it a different way, which is somewhat discouraging to me to have them not. You know, we all bought in when Obama was elected, and that was, we had 8 years of him, and some of us weren't particularly happy with some of his policies, but we stuck with it and waited for the next election. So that's what we do in America. I hope we continue doing that as a philosophy for most of us.
And the president, of course, is pushing back on China and their bad behavior. Is Schwab in China? What's your thought?
We're in Hong Kong and have been there for 25 years. It's been a great place for us to do business. We'd like to go into the mainland, but we were very nervous about giving up any of our intellectual property to the government there, the military that usually ends up owning some of the stock of the company. So hopefully we'll get some changes in the trade agreement so we can go into mainland China. But we'll see. Yeah. You know, it's a communist country and they have different ways of thinking about things. Fair trade is not fair trade the way we think about it. Fair trade is sort of the Chinese way to think about it.
And Chuck, tell me about technology. FinTech is obviously one of the really growing sectors of our economy. You've also used technology in a very effective way for investors and consumers.
Well, technology to us, having been brought up and started the company on the West Coast, we're totally imbued in technology. I've adopted it, and that was the only way we could end up being really the low-cost provider in the financial services business. We have the lowest cost because of technology. Thank goodness for it.
Yeah, but what, do you see that in terms of having it be used by users and consumers? Yes. How are they benefiting from the tech?
Well, speed and accuracy and availability 24/7. I mean, it's incredibly, it flourishes in our clients who, once they get sort of familiar with it, love it because of its accessibility.
It sounds like you're still bullish, more bullish than ever before on owning stocks in America.
Innovation is what America is all about. Free enterprise is what we're all about. I'm very optimistic.
And Chuck, it's great to have you. The book is Invested, and it is a great read on Chuck Schwab building and growing the Charles Schwab Corporation and helping investors, millions of them across the world.